Joining us right now is the Wall Street Journal's chief economics correspondent, John Hilsenrath. John, good to see you.
Great to be here, Maria.
So at some point, the sentiment changed to actually focusing on Donald Trump's economic plan and what it might mean for the economy after all the smoke and mirrors went away of the hysteria around how bad it was. But we knew that the whole time. We talked about how positive the corporate tax rate of 15% would be for corporations. What's your take?
Well, I think the story moved very quickly in markets yesterday from uncertainty to stimulus, and it's not just the corporate tax cuts. We're also talking about income tax cuts, and we're talking about $1 trillion worth of infrastructure and military spending. And so what we saw in the markets, and the rollback of regulations, and you know what I think we saw in the markets yesterday was very clearly a stimulus trade. Not only did stocks rise, but we saw bond yields go up over 2% for the first time. You know, higher bond yields means investors are seeing more growth and more inflation in the short run. You know, the other thing I'd say is this puts the Fed in an interesting position. The Federal Reserve, it doesn't look like Donald Trump is going to be a big friend of Janet Yellen's, but the Fed has been crying for more fiscal stimulus for the last several years, and they might actually get it out of Donald Trump's policies.
Hey, John, I was actually looking at the odds of a Fed rate hike, and it even is now higher than before the election at about 85%. And we're talking about these fiscal policies that are pushing that towards happening in December. And one of the things that is why bond yields are above 2% is because of the inflation expectations. Should the Fed raise rates in December, how many more times do you think they will raise actually in 2017? Where do you think their guidance can be given all these fiscal policies that are looking to be enacted in 2017?
Well, you know, right now, I think their mentality is they want to keep their heads down and kind of stick to their story. So there was a possibility that they might not raise rates in December if the markets responded really violently in a negative way to these election results. That's not what's happened. So, like you say, it looks like they're a go for December. What they're projecting is 2 rate increases next year, and because of this stimulus, I think that increases the probability that they're going to that they'll proceed with doing those 2 rate increases. It depends on how the economy responds. But if the economy is going faster and inflation is picking up, if bond yields are rising, that gives the Fed the leeway that it needs to raise rates, and that's what they've been wanting to do for a couple of years now.
John, in the Wall Street Journal today, there's a quote from one of the economic advisors to Donald Trump that says that President-elect Trump is not going to ask for Janet Yellen's resignation, but that doesn't mean that her term expires 1 year after his inauguration. But it doesn't mean he's going to go easy on her. But if he's not asking her to step down, I guess that's a good point.
No, and you know, there's been a lot of digging. There's been a lot of chatter in the markets about whether Yellen would step down. Everything I'm hearing from people in and around the Fed is that's not something that she would do. She, you know, she's been at this institution her whole working life. Stepping down would be a shot at the Fed's independence. You know, just because Trump took some shots at her during the campaign, it doesn't mean he's going to follow through on that as president. And, you know, he kind of, at some points in the campaign early on, he said he had respect for her. I think the way this plays out is she serves out her term, and then he picks his own person come 2018 to take the job.
He took shots at everybody, so I think all those folks need to just get over it and move on. He won the White House. And it depends on how he treats them going forward, right?
He needs some continuity.
They're used to these shots at the Fed. They've been a political piñata for ever since the financial crisis. So, you know, when I was talking to them over there yesterday, their attitude is, let's just keep going about our business.
Are they looking to unwind their $4 trillion balance sheet? Is that in any discussions if they're looking to not be a political piñata, as you put it?
No, and, you know, maybe you hear some of this from Trump, but let's not forget that Trump said early in this campaign that he was a low interest rate guy. I don't think that he's going to be pushing the Fed very hard to raise rates a lot. If there's political blowback, it might be because the Fed raises rates and he feels like he's not getting the same treatment that Barack Obama got with low rates. But the Fed has been saying all along, as to this $4 trillion balance sheet, that they're not planning on winding that until they get rates up somewhat higher, over 1% for sure. So I think they sit on that balance sheet, $4 trillion for some time.
All right, John, good stuff. Thank you so much. John Hilsner, now
Okay.
with the latest there.